Reading price action is crucial in trading. As a fundamental and statistical trader, I use news, SEC filings, dilution history, and other fundamental factors to choose the right stocks for me. Price action comes in next. Whether you are day trading or swing trading, you will need to develop the skills of reading the chart and let the price action tell you what to do. What most traders fail to do is that they feel very strongly about their trade thesis, thinking that this stock is going to go down or going to the moon. But then they realize they entered too early and got stopped out before their thesis eventually played out the way they planned it. So my challenge to you is by the end of this video is to take away at least an actionable method that you can use to read the price action and let the price confirm to you before you hit the trade. I'm going to break down 3 key topics of price action: the best trading time frame for entry confirmation, how to read strength and weaknesses on the chart, my personal insights on when to let the trade run or to take profit early. If you're ready to learn, I appreciate a like on this video, and make sure to ask me any questions that you have about these trading concepts. So first thing first, let me be the guy to tell you, if you're a beginner trader, do not use the 1 minute time frame. It is the reason why many developing traders lose control of themselves and blow up their account. There's too much noise on the 1 minute time frame that makes you overtrade, leading to emotional decisions and all kinds of impatient trading habits. But if you want to improve your chances of success in trading, and before that, your chances of survival in trading, I will show you how to use the 5 minutes as your entry confirmation and the 1 minute as your complementary time frame. Okay, so for the example here, we're going to use QUBT. So QUBT is a recent runner. It's coming down from its original ascent to the 27s, and right now it's at $7. It was a stock that was running when quantum computing was all the rage, and now it's on its way out. But anyway, QUBT is, we're going to use it for the example here. The top right here, this is the 5 minute time frame, and this is the 1 minute time frame. And as you can see, the 1 minute is just really noisy. There's a lot of candles in here. There's a lot of green, red. It's just, there's a lot of activity, but it's just the 5 minute one here is just a lot more cleaner and easier to read. So this is just harder to read, a lot of noise, and this is easier to read. So you can see like it's just green candle after green candle on the spike, and in the 1 minute you see that noise of the red. So you can be misled. You can be like, oh, it's going down. Oh, it's going back up. Oh, it's going back down. So it's like here, it's like you get a clear read, it's a clear uptrend, and you can be more patient while you wait for the candle to close. Because you're busy doesn't mean you're being productive, or that doesn't lead to making money. You know, just being busy and being active by, you have to get the 1 minute candles. You have to get the less than 1 minute candles. I know like there's some platforms out there that have less than 1 minute candles. I don't know, 30-second candles. That doesn't mean anything. That doesn't mean you're being more productive. It doesn't equate to profitability, or to making money or just to be successful. It doesn't. So getting a clear read is essential, and you can see here, and it forces you to be more patient while you wait to make your decision, while you wait for the candle to close. And you can see on the downtrend, it was really clear how to read them. And I like to use the candle, the 5 minute candle and the 1 minute candle, like in that pocket of volume. That's when you really get to see, because you see the rest of the day was less volume. But yeah, for that first hour in the trading day, it's essential to be able to, go back and forth between the candle sets. And, if you're a beginner, just stick to the 5 minute. So I hope you guys picked up my first personal price action trading technique. Try the 5 minute time frame or back test it. Let me know how it goes for you. I'd love to see your comments. The next price action technique is to read strength and weaknesses on the chart. By the way, I use Thinkorswim for charting, but for better trade executions, I'm using Cobra Trading, by far the best broker out there for day traders like me. Cobra Trading gives you direct market access, which means that you can control how you want your orders to get filled. This is an edge in trading because many brokers don't actually have their own route to execute your orders. The zero commission trading ones especially sell your orders to the market makers for order flow. You won't get to pick the best price. And you also have to wait longer for your limit orders to fill. Cobra offers a variety of routes, including my favorite, RUB25. You can get rebates on your limit orders using this route, and fast execution speed to trade the volatile small cap stocks. Cobra is perfect for my short selling trade strategies as well. It has the best inventory for hard to borrow stocks. If you need a more reliable SIPC insured broker, you can use my special offer link in the description to get Cobra Prime, which also gives you access to all my other trading tools, including Trade Ideas, Dilution Tracker, and Ask Edgar. Reading strengths and weaknesses requires practice and screen time. Strength on the chart means buyers are stepping in, while weakness means sellers are in control. Let's start from the chart and the volume bars. Okay, so for SINT, again, I have the 5-minute chart on the top and the 1-minute chart in the bottom. The intraday is what I'm looking at. But as we can see here, this has been running for multiple days, and it's in this case, it's a liquidity trap. So I like to, just real quick, the 1-year chart, you show the first day, it had 70 million volume as pointed out here. And it's had 1 million volume, this followed by 1 million volume and 5.5 million volume. So this day it had 70 million volume. So now there's a lot of shorts trapped in there, and they need liquidity to exit. When they start covering, it's gonna get nasty because there's not enough liquidity to get them out. And on top of that, you have T+1 situation as well, giving a hard time for the short sellers. But anyway, let's go into the 5-minute candles right here. So first, this day, the closest day right here, the latest one, this is the 1-minute candle. As you can see, the 5-minute candles are just clearer to read. Much more concise candles, less noise. You can see the colors clearly. Red indicates more bearish, green is more bullish, rather than here it's just a lot of noise. It's just scrambled. Yeah, so it's just very easy, clearer to read. Also, like when this blow off top happens, when this clear out from the higher day breakout, it's much more clearer to read the after effect, which is a downward of series of red candles, as opposed to here you have that consolidation and it's like somewhat green, but here it's just much more clearer to read that it's bearish. So I like to know that, and you can see that's the highest point of volume in the day. So it's just it's important to, it's just much more clear to read on the 5-minute candles. Going back to the first day that it ran, let's go here. This is the 5-minute. It's much more clearer to read once again when that candle closed that it's just completely bearish. As you can see, it's just easier to read. It's red, easier to read. Here it's just smaller bodies. Smaller bodies are just more noise again. So it's just much more, simplistic, less noise, Also, you can see even in the pre-market, it's still useful to go by the 5-minute because this just gapped up right here. It's like this empty space in the 1-minute. Here, it considers it as part of the 5-minute body. It's just much more easier to read, once again, and less noise. All right, and as far as the candles that show strength, green candles show strength, of course, and strong bodies, So here in both cases, this is a strong body, a large body. This is an even larger body, just much more concise and it includes, instead of two big candles, you got one. It's just easier to read. And the same thing here. It's just 3 candles. This is one, and it includes all this is into one candle here. So it's just easier to read. You don't have this noise of red, green, red, because these small bodies, they're they could indicate, consolidation works out in the bullish favor because short sellers can get squeezed when the stocks consolidate. But for it to be truly bullish, it needs a body. It needs to be green, and for it to be bearish, it needs to have a body and be red and go downward, right? So it's just much easier to read on the 5-minute. So yeah, I go back and forth between the 1-minute and the 5-minute because yeah, I'm an experienced trader. But if you're a beginner trader, just go with the 5-minute. That's good enough. It's just less noise. You don't have this weird situation here where it gaps. You can just clearly read it. That is bullish. So because if you're a beginner, you're like, what is that? Like, how do I read that? That's just, but here it clearly says it's bullish. So as you can see here, the 5-minute candles include the 5-minute volume as well. So you can clearly see the volume here is bearish. You can clearly see here the volume here is bearish together with that candle, that 5-minute candle. So in combination, it's very easy. It's easier to read once again, as opposed to here. This might scare you out because it's a lot of green, here with the volume, and you might think it's bullish. You might even chase it because it's just noisy. And then you get the red candles coming in, but the volume it's still more bullish than bearish overall. So you might get faked out, But here you can see this is completely bearish. A lot of shorts probably got stopped out on the day highs and the pre-market highs, and then completely rejected. In the 1-minute candles, as an experienced trader, I can pick that up, but the volume here clearly is noisy, when here it's completely very clear, easy to read, that corroborates this bearish price action. And again, okay, so let's go by the volume. So as you can see here, the 5-minute candles include the 5-minute volume as well. So you can clearly see the volume here is bearish. You can clearly see here the volume here is bearish together with that candle, that 5-minute candle. So in combination, it's very easy. It's easier to read once again, as opposed to here. This might scare you out because it's a lot of green, here with the volume, and you might think it's bullish. You might even chase it because it's just noisy. And then you get the red candles coming in, but the volume it's still more bullish than bearish overall. So you might get faked out, But here you can see this is completely bearish. This candle right here was followed by a lot of volume on the downside. So very, very clear to see that there. And the same thing in the morning. You don't have this green candle here, but more importantly, here is really convincingly bearish, that kill candle. A lot of shorts probably got stopped out on the day highs and the pre-market highs, and then completely rejected. In the 1-minute candles, as an experienced trader, I can pick that up, but the volume here clearly is noisy, when here it's completely very clear, easy to read, that corroborates this bearish price action. So you can see RGTI in the pre-market, even the 1-minute candles is confusing. It's noisy. However, in the pre-market, RGTI and the 5-minute candles is very easy to read that bearish price action, starting with this wick and this red candle with a nice body pointing down, followed by a series of them. While here it's just very light volume. I mean, this is both of them are light volume, but the candles here are very convincingly red. They're heavy, Here it's not as heavy. And then later in the morning, you get these convincing ones. They stick out right like a sore thumb. These big ones, as opposed to here, it's just surrounded by a lot of noise. And here it's much more noisier. So it might shake you out because you might think it's gonna bounce, but it's really not. It's just because it's heavy, as you can see in the 5-minute. Okay, another example we're gonna use is XOS, and once again, it's just much more clearer to read in the 5-minute, and because you can see here, the 5-minute candle, it rejected. This is a red candle down, and it's not exactly a spinning top. So a spinning top, it's deciding which direction it's going to. But in this case, it's more heavier towards the body, is heavier towards the bottom, which indicates bearish price action. And yeah, you can see clear here. Even though this candle on the 1-minute is green, I would consider that a bearish candle as well. It's more like a Greystone doji, but you can see it much more clear here. And to add to that, we can look at the volume here. You can see, it's much more easier to read this volume. You can see those green bars for the green volume that helped push this thing up. And you can see it was unsustainable for the rest of the day. The volume just faded off. It's like a seesaw. All the volume is pushed on this side. So that's not sustainable volume. Volume, especially heading into power hour, for a stock to, threaten to break out, it needs to have some volume coming in, and this one just completely faded off. One other feature I like to use on thinkorswim is the overlap volume feature. I'll flip it from time to time, so I can get a clearer picture of that volume. And as you can see, the less candles, the better. It's like it just includes the same information but with less candles. You can get a nice read. So you can clearly see here this has more green candles when that breakout was happening, and then slowly, big sell-off happened, and it wasn't able to regain its volume for the rest of the day. Understanding volume is very important in trading. Personally, I don't get how some traders only use a blank chart on TradingView. With no volume, no level 2 time and sales, all they do is mark a blank chart using the so-called ICT strategy. The candlestick chart is just a form of data visualization for price only. It doesn't tell you much about how strong the demand or supply is. I don't think it's possible to become consistent in trading without understanding volume, strengths, and weaknesses. Also, if you would like me to dive deep into level 2 time and sales next, please comment level 2 below. I want to make sure that I'm sharing concepts that are actually useful for you guys. With better understanding of price action, you will slowly improve your patience, letting winners run longer and knowing when to cut when the price is acting against your trade. Let me talk about the risk management aspect first. Okay, so a lot of times traders get caught up with trying to be right and actually make money or get multi-decade career. It's just like improving their lives, using trading to improve their lives. It's like with the money we get from trading, we can improve our lives. We can, you take each individual trade is each individual trade, one good trade at a time, just focusing on that. So traders get, like they lose sight of that, and like they want to be right. The company is bad. This can't be happening. This price doesn't deserve this. It has to go down. This news is bogus. It has no news. It has no news. This is ridiculous. So they get caught up in that. And a lot of times, that's why like you have to be careful about social media. Like, are you trying to chase these P&Ls that are on X or on some certain leaderboards online that people are not even showing their actual like right accounts, or like we don't know what's really going on? It's all like you're just chasing ghosts. You're trying to prove to the internet that you're worthy. You're trying to prove that you can beat that person. You're competing against someone that you don't know anything of any backstory about them. You can be right, and you can compete with this person that you don't know anything about. So your trade decisions are, so you got to be very careful with that. It's psychological. It's all just tied to ego and wanting to be right. It's like, okay, this company is bad, but that squeeze is a squeeze, and squeezes can do some crazy things. So we got to respect the price action. You got to have a stop loss. You got to cut the trade where it's going to be cut, and a lot of times it's going to go back down. And when you're a short seller, it's going to go back down, and you are right overall, but you were wrong with the trade. So that's just the way it goes with trading. So you got to be just mentally sharp and always aware of, and catch your ego, especially if you're just starting out. You're going to face these things. It just comes with the territory of trading. You always reflect with yourself. Was this the best decision? What was affecting me psychologically? What was my mental state of mind when I was in this trade, when I made that decision, or when I broke this rule? So you always got to be aware. Was I being affected? You got to be honest with yourself. Was I being affected by outside forces? Was I being affected by social media? This is one that people don't want to admit, because it's ridiculous. It's like there's people on the internet, or like some image on the internet that could be photoshopped or something. We don't know. We don't know what we don't know. We don't know anything about it. You see an image, and now you want to compete with that image, of some P&L that you saw, or somebody showing off some trade that we don't know anything, any backstory on or anything. To be good at trading, when you're on your road to profitability, you got to work on yourself a lot. So this all just ties to like personal growth and self-realizations and self-reflection that you can practice through journaling techniques. Okay, so and then on top of that, instead of trying to be right, you have these safety nets in place, because we're all human beings. We're all prone to errors. So you got to have safety nets in place, and that comes with a broker max stop. That comes with having strict stops, and you don't have to hit the broker max stop. You can cut the trade before that. But yeah, you know, so you have the broker max stop, you have a position max size, you have a dollar max size, you combine these things, and you know, you have these safety nets in place. That way you check yourself against yourself. You protect yourself against yourself, which is, you know, the human condition of just, you know, we're not perfect, and we're always constantly striving to improve, but we're not perfect. And that's why we definitely have to have all our safety nets in place, because the safety nets in place are gonna keep us here for the long haul, so we can have a good trading career and we can enjoy life. You know, with trading has a lot of good stuff that comes with it once you get profitable, and you know, and you grow as a person, you grow as a trader, you grow as a person. Life is great. So have your daily stop loss in there, have your broker stop loss, have your position size dollar max amounts, have your position size amounts. You know, do all these things so you can, you know, trading can be a viable career for you. If you don't have these things, it can be very problematic. Now, when you are in a profitable trade, how do you know if you should stay longer or take profits early? Okay, so for me, I have my ace setup playbook, and as I discussed earlier in previous podcasts, I look for certain plays, like for example, a gapper. Let's say 100% gapper, shorts are attacking it all pre-market, shorts attack it in the first 5-10 minutes of the day, and then all of a sudden the stock halts up, breaking the pre-market highs, breaking the previous day high up to that point. And for me, that's close to an ace setup. It depends on the catalyst, of course. I'm a fundamental and statistical based trader, so I'm looking at the catalyst. If it's like, for example, patent news, we went over SINT earlier, that had patent news. That's part of it checks out for a lot of my criteria. So now I can go by the price action. Okay, the news, like this is not gonna be like something crazy outlier with algorithmic buying nonstop all day long, because like it's a catalyst like cancer news or Alzheimer's or some kind of real news. This is patent news. There's not gonna be any of that. It might go. I mean, it can still. I still gotta respect it. It can still go up hundreds of percents. But like, you know, now I can just focus on price action. I don't like. I already settled the news, and the catalyst is I know what I'm dealing with. Now I got to deal with the price action. So yeah, like I was saying earlier, a break of pre-market highs, break of day highs up to that point, and if it halts up into that, I know short sellers are all stopping out. That comes close to an ace setup for me. And as they're stopping out, I look to enter short after it unhalts, and I go by price action with that. I'm looking at the candles, and I'm looking at the 1 minute candles, 5 minute candles. And that's the beauty about the halts too. So these halts give me time to flip back and forth and decide like what is my game plan. So it's like a timeout in sports. Like I get to really focus and coordinate. You know, like in basketball, they do a timeout and they can come. You know, they can kind of like strategize, and in the last like couple of seconds of the game, and a lot of games are won like that at the last buzzer. You know, so at the last minute buzzer, last second buzzer. So yeah, that's how I use price action, candlesticks, which we just went over, and how to determine my entries, and I consider the catalyst and everything else that I just spoke about. I use Ask Edgar as my primary fundamental stock research tool. It is like ChatGPT for traders to research the SEC filings of small cap stocks, reading into the company's cash situation, dilution history, as well as the insider motives. This tool is especially useful for small cap stock traders. If you watch my other videos about the importance of float and institutional ownership, this tool will help you save a lot of time when you do your due diligence. Check it out in the description of this video. I hope this video shows you the reality of trading. Trading is a lot of work, not an easy money business. However, it is a skill set that can be very rewarding for a lifetime when you master it. Give this video a like if you enjoy my sharing, and go ahead and click this video where I explain my A+ trading strategy step by step.